Smart money versus the dumb money. Same chart, different eyes. We're going to be going over the terminology of PDA rate and key levels, which are not that much. And as well, we're going to be going over the smart money versus the dumb money. How did you see the chart? They have the same chart, but different eyes. This is how a smart money versus the dumb money trades. Let's get straight into it. There's going to be a terminology as well. We're going to be going over breaker blocks, fair value gaps, and order blocks, and highs and lows. Highs and lows, it cannot be, dumb money or smart money, right? It can only be smart money, right? So we're primarily going to go over breakers, fair value gaps, and dumb money. How a dumb money versus a smart money trade. Same chart, but different eyes. Let's get straight into it. A dumb money would take it like this, right? Dumb money breaker pattern with no key. So a dumb money breaker equals pattern with no key level. So this breaker block never tapped a key level. Real quick, before we go any further, make sure you guys join Discord. Link is down below. Make sure you guys like, comment, subscribe, share, and join Discord and get straight back into it, right? A dumb money breaker is a pattern with no key level. So this breaker block, this last up closing candle, super out the low, never tapped the high different key level. Similar to classic TA higher, lower, low theory, right? So a high, higher, high, lower, higher, high, higher, low theory, right? So people make some bullshit theory, but this is a pattern dumb money breaker, which does not tap any key level. And keep in mind, this is not my PDF. I will explain it the way I would like to explain it, right? But this is correct, right? Common pattern trader trap, which they long a breaker, they get disrespected because this breaker never, first of all, tapped the high different key level. It's not about tapping the high different key level. Keep that in mind. You need two things. No, not two things. You need three things, right? This chart just says key level. You don't need a key level. You need more than key level. You need a range. You need that breaker to close out the range low. You need that breaker to tap a key level, and you need this breaker to be in a specific time. So you need three, intricacies for it to work out, right? Without that, it will not work out, right? So a smart money breaker is as soon as we close above the breaker closing price, we have confirmed the directional. We have confirmed the direction of the high and key level. The closing price of the breaker is a sensitive point, right? The closing price is right over here. So that thing, not the wicks, but the closing price is sensitive point. You can see zero drawdown goes up higher, right? And you can see this breaker high. So market making a low, high, lower, low, higher, high. This is the last high to super out the low. The highest high to super out the low. This is a actual smart money breaker that taps a higher different key level. This right over here has three things in common. First of all, this looks like to be a range low. Second, this is the higher different key level. And third, this looks like to be a specific time. So it works out in your favor and goes up higher, right? This looks like to be a London low of the day near continuation, right? Now let's go over the dumb money fair value gap and the smart money fair value gap. Same chart, but different eyes. A dumb money fair value gap, they look at the 15-minute, 5-minute, 15-minute, 5-minute, 30-minute chart, 1-minute chart, longing a random imbalance with no criteria, right? So dumb money fair value gap, random imbalance with no criteria, pattern traders prone to fail, right? This fair value gap is a lower time frame, is in a 5-minute time frame, 15-minute time frame. A ICT trader, I know ICT trades in the 1-minute time frame. Are you going to be able to trade 1-minute time frame? If how he says this himself. If you don't know where the higher time frame bosses, if you don't know what the higher time frame daily or the weekly or the monthly is going, you're gambling, right? Because the lower time frame, it goes to the higher time frame, right? The lower time frame structure is going to the higher time frame, right? And when it goes against it, this is just an OTE for a push up higher, right? A lot of trades will long over here think it's going to go higher. This is just an OTE, and when stuff goes up higher, right? So you can see low, high, lower, low, higher, high, right? Eventually it goes above it. This is a stable low, stable high. This looks to be a 0.62 to 0.70 mark of the OTE and goes up higher from here, right? These are all just going on the higher time frame. So if you're trading on a 5-minute, 15-minute fair value gap and you don't know where the high time frame is going, you're prone to fail because it's not gonna work in your favor. You're long and shorting a random ass fair value gap, right? Now let's go to a smart money fair value gap. A smart money fair value gap is produced after breaking a high paired with an order block, right? Smart money technique to spot manipulation at the lows, right? Those of you paying attention are very familiar with this fair value gap, right? So this fair value gap right over here, why this fair value gap a smart money fair value gap? First thing, it did a couple things here, right? First thing is that this fair value gap right over here, first, it souped out. So basically, it had a soup with a regression block. It had an SMT with a regression block, or it was paired with an order block. A order block is higher probability with paired with a fair value gap. I do not stand by that, because if you guys are just looking for always for a fair value gap paired with an order block to only look for longs after that or short after that, you're not gonna get that many setups. You're gonna get setups, but market does repeat itself. Those scenarios will happen, but it's gonna be very rare. You're gonna miss a lot of trading days, right? So the reason this fair value gap works out is because of a couple of things, right? This fair value gap works out, in my perspective, as I said, this is not my PDF. I was explaining the way I would like to explain it, right? You could say out of this order block, potentially, I had SMT, and this order block could make a profit higher probability. The way I see this working out is out of two things, right? It's range, time, and the directional bias. This fair value gap looks like to be in a 4-hour time frame, right? This fair value gap here, it looks like to be a near continuation, right? It looks like the market wants to continue and pop higher. So if it's a near continuation, first thing, that's time. Second, this is probably a Pacific time around, London session or New York session. Third, that this fair value gap is inside the range. You can see this, the third fair value gap of the low is the CRT high and low. There's a CRT low, CRT high. CRT low gets soup, we're going to CRT high, right? There's two things in here: range, Pacific time, and the key level, obviously, right? Which is the fair value gap, right? And either way, this is a very high probability setup, as I said in the PDF, is that it broke above the high, right, and paired the order block. So it broke above this high. Now you have a breakup block with a order block and with overlapping fair value gap, which is basically the unicorn model, right? This is not a unicorn model because the low number got sued, but a form of unicorn model. There's literally, there's types of form of a unicorn model. This one, looks like they had SMT with a low, because this low probably got sued in a different pair. Probably not. I don't know, right? But to me, the reason it's high probability setup is why. The reason it's a smart money fair value gap is, first of all, inside a range. Second, it's specific time. Third, it's key level, right? A key level is fair value gap, and it's the higher time frame, right? And you have a higher time of direction bias. It's going to be a near continuation, right? So near continuation is a time-based concept, right? So now let's go over the smart money versus the dumb money order block, otherwise known as model number 1, right? Same chart, different eyes. Dumb money, right? A dumb money long this, this order block, dumb money order block with no criteria equals random down close candle, right? No difference between this and support resistance levels, right? Both are horse shit, right? So now let's go over the smart money order block. A smart money order block is the candle look right at the low. As soon as we close above this candle, the algorithm will respect it as an entry level, right? So other words known as model 1, right? This boom, model 1, it goes up higher. Now, how this, keep in mind, this could definitely fail, right? This order block could have definitely failed. How come, right? Because this example is a very perfect example, because this is a 15-minute time frame, right? Since the 15-minute time frame, this order block did a couple of things here. First, everything here, this breakup block must have a high different key level. It must be Pacific time, and it must do a range, right? A fair value gap is already in a range, right? So there's a key level is already there. You need to have a time and the range, which it has right over there. A auto block needs to tap a key level. It needs to, um, you know, soup out the range low, which is basically the candle that liquidated the low. So it needs to soup out the low, which is the range low. It needs to tap the high tipping key level. It is willing to be Pacific time. This looks to be a trading hour, whereas London session or New York session, this looks to be a New York reverse, or it looks to be like a London low, right? Eventually goes up high from here. Because London session just continue to press it up high, London session just, I mean, New York session just continued to price higher from here and forward, right? So the reason this is a smart money order block, at first, it tapped a higher tipping key level or had SMT with a high tipping key level, which could be fair value gap, high and low. It could be a rejection block or breaker, right? So it tapped a higher tipping key level. It souped out a range high and a range low. So you souped out a range low, and as well, it had a specific time. The time was London session or a New York session, right? It could be a New York session or London session. It looked like to be a New York. It looked like it'd be a London session. So it purged it out. He purged out the range low. It tapped the high tipping key level, and it was a specific time. This is how this is smart money, right? Smart money doesn't just long a random fair value gap. It doesn't short a random, breaker block. They must have criteria. They must have multiple, steps in order for them to execute a trade. They must have the time there. As you guys know, time is more important than price. They must have the key level there, and that must purge out a range. Why a range? A range will make you buy low, sell high. So if you're selling high, you want to sell up. So how do you know you're selling high or buying low? You will never know if you're buying low, selling high. You would never know if you're buying low here, selling high here, right? During Pacific's price, you don't know if you're buying low here, right? Because am I really buying low? Oh shit, am I really buying low? If you go you could zoom out. Are you really buying low, right? You would never know. So how would you know if you're buying low to that specific time? Is by using ranges, right? The specific time you're buying. This is not perfect, it's not a perfect example, but your specific time you're buying low because the range low got purged, right? So this is how you know it's gonna work out. Actually, this is a perfect example right here. Then in Pacific time, right? And this is the high as well. Then in Pacific time, you're buying low, right? You're basically buying low here. How? Because there's a range here, right? Range low gets souped. You're going to the range low got souped. You're going over to the range high, right? Which is over here and over here, right? So the specific time you're buying cheap, right? The specific time of the price you're buying cheap. So you're buying low, selling high, right? If you buy inside the range, you're buying inside the range where the dumb money longs and shorts a random fair value gap. You're buying this. If you're trading inside the range, you're just longing a random ass fair value gap. You're shorting a random ass, you're longing a random ass auto block that gets liquidated, right? So you're constantly shorting or longing a random fair value gap. You're not executing. You're executing inside the range where dumb money, where people accumulate the orders, they long short, and both sides get liquidated regardless, right? Because once the range low gets purged, you go to range high, right? Because you're buying low, selling high. Buy low, sell high, right? So ranges. Why do you need ranges there? Why do you need ranges there? Because ranges are first of all highs and lows. How is the market controlled by? Highs and lows. And secondly, the reason they're important is because the highs and lows, a range makes you buy a low and sell high during that specific time. Market makers will never buy high, never sell low. They will always buy cheap. They will always sell high. They will never ever accept a, sell low, buy high. They will never buy around here. They will never sell around here. They'll buy here. They'll sell here. How do you know it's a specific price point? That to buy a fucking cheap here is during that specific time. This is a discounted price. You would never know if this is a discounted price because you could do, oh yeah, during that lower time frame, the discounted price. Over in a lot higher time frame is not. Okay, in the higher time frame over here, if you were to buy here, you wouldn't know if the discounted price because oh shit, you can scroll down here. Oh, you're not actually buying low, right? So during that specific time, you're buying low, selling high, right? So you would not know if you're buying high, selling low in the future, but during a specific time, you're buying low and selling high, right? During that specific range. So you're buying the range low, buying range high, right? So there's the range high, range low. So this is discount, this is premium, right? How do you know? Because highs and lows, right? A high is a premium, a low is a discount. That's all you gotta know, right? And how you know the most efficient way of knowing if it's high, this high, and this low is, a discount in the premium by using ranges, using CRT, right? Using MMXM, which is basically CRT, right? So this is how you guys know how to, how a smart money versus a dumb money trades, right? It's how a smart money versus a dumb money, same chart, different eyes, right? This how why did this breaker block currently working on your favor, right? How does breaker block work out, right? Why? It did two things. Look at the time, line position. It tapped the hard tipping key level. It purged at the range low. So it meets three things here: key level, time, which is line position, and the range. It purged at the range low. Yeah, it was at a hard tipping key level, and as well it was in a Pacific time, right? It was in as well purged at the range low. And but wondering, well, this high never tapped the key level. It was already at the key level. So does he need to tap another key level? No. It could either be in a key level or already tap a key level, right? So it could do two things, right? It could go tap the key level and go up higher, or it could already be in a key level. And but you're wondering, well, if it's in the key level already, how do you know it's gonna go a little higher or lower here without sweeping us out? By waiting for the time. Use your brain a little bit, right? Use your brain, right? Use your brain, right? So time. So now this is a Pacific time. So you already tapped the key level. All you're waiting for the Pacific time, right? Pacific time is between longitude or New York, right? So time clicked in. There's the last side of soup at the low. Boom, goes up higher. Boom, boom, right? So time clicked in. This low gets soup. Let's high. This soup at the low. Breaker block. Boom, boom, and price was up higher, right? So it could do two things. It could already be in a key level and go up higher, right? Just wake it up with the Pacific time, and all the 3K2s must be there, or SMT diverges, right? And the other thing is that, or you could go tap the Hartsville key level. You must do either of those, right? And all the other cuts must be there. You must either go. It's not either. You must always have a Pacific time. You must soup out the range low, and this must, or range high, right? And as well, it must be a Pacific time, right? So range, key level, and time. The key level could be SMT, the range could be SMT. So don't worry, because SMT prevents the soup from happening. And one very last thing. You do not want to long a random breaker block, a random fair value gap, a random order block, a random rejection block, or short it. You never want to do that without a range. You guys see why these breaker blocks, these order blocks, these fair value gaps gets much more respected when it purchases out the range low, range high, or it has SMT, right? And you guys see why this breaker blocks and this order blocks, this order block failed, right? All of these order block to the downside failed. Breaker block failed, right? Why did it fail? Because range, right? Quick little sauce to you guys, right? Just no range, and your key levels will be respected 100 times more, right? So this is how you guys could trade. This is how a dumb money versus smart money trades. Same chart, different eyes. Thanks for watching. Join us, coalition down below. Make sure you guys like, comment, subscribe, share, and see you guys later. Peace out.